Hello, fellow realists. I'm David Ravel, and this is ValueSide. For all of our articles and podcasts, visit valueside.com. Well, today, the mystery of the missing workers. Well, for over a year now, the biggest mystery for Wall Street has been, where have all the workers gone? The country is currently going through the biggest number of job openings in recent memory. You've no doubt seen the help wanted signs. They're everywhere. From small stores to giant corporations, it seems like everyone is short-staffed. Reports are surfacing that airlines are having trouble scheduling flights because of missing workers. Hospitals also are having issues finding people to man their 24-hour schedules. Stores, restaurants, services, it's all the same story. Not enough workers to go around. Now, it was a very big story in the financial press last year, you may recall, seeing literally dozens of stories about the lack of workers. But that was last year, and as in many things, Wall Street has simply moved on. Unable to find a ready answer to the puzzle, the street has simply gone to other topics by now. And that's unfortunate. You see, sometimes it takes a while for the data to come in. The data that will give us a good overview of the big picture of what's really occurring. But that appears to be just what's happening with all of the missing workers. Oh, there is one other factor to consider, and that is that the answer to these missing workers may be decidedly not politically correct, not something that the powers that be want to hear. Nevertheless, let's see where the numbers may lead. Currently, there are over 11 million job openings in this economy. That's over 7% of the workforce, the largest number of job openings in our data banks, and far exceeding anything else that we've ever seen. For 20 years, from 2001 until 2021, job openings never exceeded 7.5 million, and the average job openings during that 20-year period was fewer than 5 million. Now, there are many reasons for a position to be unfilled. A company is expanding, creating new job openings. A position may pay too little, less than the going rate, and a job may be left open. Or there are simply not enough qualified candidates to fill that position. Too few airline pilots or surgeons can cause job openings over there. And the reason that people leave a job may also be many and varied. Retirement, accepting a better position, or a geographic move may all come to the list. It goes on and on. After Wall Street heard of the current job openings, they posited yet another new reason. They suggested people would rather stay home and collect unemployment and stimulus checks than go back to work. Well, whatever the reason, I'm sure there may be many others to add to the list. But for 4 million people to suddenly no longer show up for work tells me that something more is happening currently. That, in addition to the usual reasons for job openings, something else is at work now, a new factor that we have not seen before. Now, at first I thought it might be the pandemic that caused these job openings. The pandemic, you'll recall, began in China in January-February of 2020. For a solid year, until December of 2020, the nation was vulnerable to the disease, facing it without any vaccination. The vaccine would not receive emergency use authorization until December 10, 2020, and then the first shots were administered on December 14th. And here is the curious part. There were no increases in job openings throughout 2020, the year of the pandemic. We began 2020 with 7 million job openings and ended the year with 6.9 million job openings. Job openings actually then went down in 2020. But everything changed the very next year in 2021. Openings built throughout the year. January saw 300,000 more openings than we ended 2020 with. By June, another 2 million were added to that number. And by December, we were doubling June's number with 4.6 million more job openings than we ended the year before. It's a remarkable climb, don't you think? To the highest number of job openings ever recorded, nearly 11.5 million jobs waiting to be filled, came December 2021. What could account for such a dramatic change in job openings for the year of 2021? As we said, there are many individual factors that cause someone to leave their job to create an opening, but that's already accounted for in those base numbers. No, something was different in 21, something that we have not seen before. And it was not the COVID disease. As we said, there was no change in job openings the year before, the year we faced the disease alone. No, the variable that was added to the job openings equation in 2021 was the vaccine itself. Remember, the emergency use authorization started in December. Throughout 2021, more and more workers were vaccinated. No doubt some of those vaccinated endured an adverse event, something that might cause them not to look for work, at least not immediately. We know that some have experienced an adverse event. It's reported in the Vaccine Adverse Event Reporting System, VAERS, which currently records 1.2 million adverse events to this vaccine. Interesting conclusion, therefore, isn't it? Something that the political and medical establishment do not want to hear, and yet it seems the most likely answer to our question. As Sherlock Holmes would say, when you have eliminated all which is impossible, then whatever remains, however improbable, must be the truth. Well, the headline news today, without a doubt, will be the inflation reading for March, and all the tea leaves point to something really explosive. Washington is certainly expecting something big. From Jen Psaki's off-the-cuff remark yesterday that inflation is something to look for, to the 4 Fed governors' speeches yesterday and add one more today, you get the sense that Washington wants to get out in front of this, as if they're leading. Now, in February, you may recall inflation was roaring ahead at 7.9%, but it certainly didn't stop there. It's been interesting to watch Wall Street trying to catch up to this speeding train. For the past week I've watched as the street keeps raising their estimate of just what today's reading will be. Last night the street settled on an annual inflation rate of 8.3%, but I notice that just this morning they're tacking on another 0.1% and are now estimating 8.4% for inflation for March. But whatever the number is, just remember, it's going to be low. Today's inflation reading reflects month-end March, and we've sailed on for 2 more weeks since then, and inflation keeps chugging along. Can I hear a 9% inflation rate for April? I think it's coming. Now, in overnight news, the U.S. isn't the only country struggling with inflation. Japan, which has had mild inflation at the consumer level, struggles at the producer level. This island nation with limited natural resources is having trouble securing the raw materials at reasonable prices. Japan's producer price index came in at another 9.5% plus reading this last month, making this the highest producer price level for Japan since way back in the 1980s. Now, Germany has also just reported their inflation, and it's also at a level not seen in decades. For Germany last night, reported basic inflation of 7.3%, jumping 2 full percentage points over the level of the month before, and this at a level not seen since, again, way back in the 1980s. Finally, and most appropriately against this inflation background, Investors Business Daily will provide their monthly Economic Optimism Index, a good measure of people's view on our economic future. Briefly put, we're not very optimistic right now. This index is down over 27% so far this year and is expected to work its way slightly lower today. Now, turning to the earnings calendar, a couple of surprises so far this morning. Albertsons, the big supermarket chain, has just reported. Now, supermarkets are considered the best of defensive stocks. That is, they are presumed to do well no matter what the business cycle. People, after all, need food during good times and bad. but these high food prices must be taking a toll on Albertson as their stock is trading down on today's earnings results. Also reporting earnings this morning has been used car dealer CarMax, again a classic defensive stock. And combine this with high used car prices, and I would have thought that CarMax would be doing well right now. But not so according to the market's reaction. CarMax stock also down so far this morning. And that's the value side for this Tuesday, April 12. For all of our podcasts and blog posts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.